This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Hello again from TF Metals Report, and welcome to your weekly podcast summary, this time for the week of November 13th through the 17th. As the week began on Monday the 13th, we wondered if we'd get a little washout right at the COMEX Open after the dreadful way we finished the previous week on November the 10th. It's exactly what we got. We'd hoped that that would be the low prices of the week, and it turned out it was. The other way we began the week was with a close look at the dollar index. If you listen to these podcasts every week, you know that's a focus we watch on a daily basis. And last week, we watched it very closely because we didn't know if it was breaking down and rallying back and ready to go to new highs, or whether it was breaking down and ready to start a downtrend. It's very much still in flux back on Monday. We'd get the answers as we go through the week. But Monday, it was still a focus of our daily podcast. And here is some of what we discussed. The dollar index back down today, and now you can see the crux of the matter. Remember, again, you can see it on this chart. Breaking down through 101 in July, getting back above 101 about a week later, and then coming down and using 101 as support in late July, and then surging past that earlier high, about 101.75, and then it was off to the races. So what do we have now? Dropping through 105.50, getting back above 105.50, and now it looks like it wants to try to use 105.50 as support. If it breaks down, goes below 105, great. But the concern is still that it could now move above 106, 106.50, 107. Okay? So we're going to be watching that again all week long. Things did begin to turn around on Tuesday the 14th. Feel a little more optimistic as the day unfolded. In our podcast that day, we also took a look at the mining shares. A proxy for the sector is the GDX, the big ETF of mainly gold miners. And that chart really looks interesting. We discussed it in some detail in our Tuesday podcast, and here's a little bit of what we talked about. All right, and finally I thought I'd end with the GDX because I looked at it yesterday and said, God, this looks like crap. And yesterday at this time, yes, looked like crap. But I was like, that wasn't very nice of me. What did the GDX ever do to me besides cost me a lot of money? So I thought I'd give you a little more positive spin as we wrap up today. Two things, okay? First, note the circles, okay? They're not perfect little island reversals, but they're close. Do you remember the chart last year? I guess I could have gone back and pulled it up from early November last year, the little island reversal and then the rally into year end. All right, in making that double bottom, February and early March, see that little island? It's not perfect, but it's close. And then once that happened, look at how we soared from 28 to 36. Note back in early October. Again, not exactly an island reversal, but it sure looks a hell of a lot like the one back in early March, doesn't it? 4 candles versus 5, and a rally from 26 to 30. But now look at the last 2 days. Gapping down, I guess today's Tuesday, so Friday, worse yesterday, but then gapping back up today. Now that is an island reversal. Okay, so that's good. Now, the other thing I want to point out to you is still the possibility of a reverse head and shoulders formation here. You got the two shoulders at about 27.50, the little island reversal below it, and now back above. Looks to me like that's probably what this is. Got a head down there near 26. And then, of course, the shoulder line at 30. If we can, and I suspect we will, but it might take, a cessation of the tax loss selling and, and that pickup in buying in the final 2 weeks of the year. But once we are back above 30, this chart's going to look pretty good with 33 and then 36 in sight. But for now, like I said, I kind of picked on this yesterday and went, bleh. It's really not that bad after what happened today. On Wednesday the 15th, we noted that the price of COMEX silver had indeed reversed on Monday. That rally extended on Tuesday and got above the 50-day moving average. But then on Wednesday, it extended even further. This is a little bit of a trend change here. It didn't just fall back and go back below the 50-day. It stayed above and went even higher. Could that be foreshadowing good things to come? Well, We talked about that on Wednesday the 15th. This is COMEX silver. When I printed it, it was 23.51. As you can see, as I record, it's 23.50. Okay, so we're right at it. As you can see, in the rally in October, and then a second attempt late in October, price extended over 23.50 as it did today. But we never closed above 23.50. In fact, you got to go all the way back into mid to late September to find a close north of 23.50. If we're going to attack that 200-day moving average, which is up here at about 23.80, and then the trend line, which is also up there near 24, if we're going to attack it, we got to close above 23.50 first. Also, very nice to have a second day in a row above the 50-day. Notice back last month, every time we closed above the 50-day, 3 times, we were followed with a red candle. 1, 2, 3. Yesterday we closed above the 50-day. Today's a green candle. Okay, so that's kind of compelling too. So we'll see. This looks pretty good. On Thursday the 16th, it was time to take a good long look at COMEX digital gold. It too had a heck of a week, not on the same percentage basis as silver, but still up maybe $50 from its lows back on Monday. That ain't too shabby. Now, it's not in the clear yet. Even though it's back above its 200-day moving average, it's going to have to fight against the banks with option expiration and contract expiration coming up in the next couple of weeks. But the chart sure looks a lot better than it did last week. And as we go into December, there are some key technical levels to watch that if we could get through there and close above there at the end of the year, boy, oh boy, are we going to be set up for a strong first quarter. That's all part of what we discussed Wednesday the 16th. Here's the thing with gold. Again, above its 200-day moving average. It got above it back in October, fell back, the gap moved back down below it last week, looked awful, but now here we are back above it again. 1981 is the 200-day. Yeah, maybe we'll roll over. Yeah, who knows? But this doesn't look like a flag to me. I mean, you could have maybe thought it through yesterday, but this extension today looks pretty strong. The goal, ultimately, is to get back above 2,000 and into that congestion zone. See that in the purple? This is just the December contract, okay, over the last year. You can definitely see where 2020 to 2040 is either resistance or support. I know we're not going to make 2,300 by the end of the year unless, absolute madness hits. But if we can get to December 31st and close above 2040. Now, we won't be in the December contract anymore. I guess that'll be off the board and done. We'll be into February, and we'll pick up a little contango there. But nonetheless, if we can get above this congestion zone, we can finish the year north of 2040. We'll be ready, okay? You can see that. And again, we're going to have trouble over the next couple of days because of all the expirations, but that'll be our goal in December. And on Friday, November the 17th, we finished what turned out to be a great bounce back week in both COMEX digital precious metals. Gold's up about $50 from its close last Friday. We'd take that every week, wouldn't we? And silver had a particularly strong week. At one point earlier on Friday, it was up about 11% from its lows seen just back on Monday morning. A heck of a rally. It was due to kind of run out of gas, maybe run into some short-term profit taking. It also flew a little too close to the sun, as did gold. Silver for the second day in a row on Friday, getting above its 200-day moving average and then falling back. So there's obviously an effort there to keep the downtrend from May the 5th intact. We'll see how that goes next week. We do have some data next week that will impact things. Durable goods. By Friday, we get the flash PMIs for November, but it will be a holiday-shortened week, too, with the U.S. holiday of Thanksgiving closing all the markets on Thursday, and then a shortened session on Friday to wrap up the week. And then keep in mind, as we move into the last week of November, COMEX December contract options will price and expire on Monday the 27th, and then the contract themselves, they will go off the board 2 days later on the 29th. So expect some pressure. We always get it. Some price management through that time period. But with the way things have bounced back, the downtrend that seems to be unfolding in the dollar, December looks like we might finish the year on an uptick. But for now, let's just wrap up this week. It sure feels better than it did last Friday at this time. And let's look ahead to what should be a very interesting month of December once we get there. Thank you again for listening to this weekly podcast summary. I hope you enjoy this service. It's given to you for free, but we want you to come check out TF Metals Report. Become a subscriber. It's only $15 a month. And as we wrap up this year and head into 2024, it'll be money well spent. I can promise you that. Again, check us out, tfmetalsreport.com. Have a great weekend.